Why project finance? Now, I don't know you as an audience whether I'm talking way over your head or hitting your feet and boring you to death. It's difficult, but I'd just like to say very quickly that project finance is very important because it's a special form of finance. It's not like any other finance. It is based, secured on a single project. It's based and secured on income streams from those projects. Has a high ratio of debt to equity. And if you think about debt being high volume, low margin, and equity being low volume, high margin, this is a very different form of finance. Lenders rely exclusively on the contracts for those projects. There's a finite project life by which the loan has to be repaid. At the moment, the government can carry on its debt forever and a day. Because you and I have mortgages, we need to pay it off because we're going to die someday. Governments don't die, companies don't die. As long as they've got assets, they can keep it going. But project finance is different. It has a life of the project, and that's it. It's got to be paid by then. And there's been some innovative moves afoot lately to restructure that. It is a very complex area, project finance. It has a multitude of benefits for both the users, the owner, the public sector, and the investors. I don't want to bore you to death, but it is usually lower total funding. It does increase capacity to invest. And it has third-party due diligence, which normal project finance by the public sector does not. So there is a number of issues that need to be addressed to change the way we finance major projects, and we have to change. We cannot finance projects the way we used to and expect to meet the challenge for the next 20 years. It can't be done. And if we can't do it, we will not come out of the recession for a long, long time. So the first point is, what does the government do? The government has a huge role to play. I see this as almost like a watershed time. Because we're having an election as well, it actually emphasizes the whole point in time. This is our opportunity to leave a legacy to future generations that Victorians did to us. We will not get that opportunity again for a long, long time. And if we grab it, it will be a new era for Britain. If we don't, it'll be a slow, painful one for a long, long time. So what are we talking about? We're talking about the UK, we're talking about large infrastructure projects, we're talking about project finance for the reasons that I've just outlined. And we are sadly going into a new era. Firstly, as I said, the role of the government is vital. The government has been traditionally, through the application of Keynesian economics, trying to boost consumption artificially as a means of addressing the recession, as the liquidity problem. Somebody described the scrappage, the car scrappage scheme, as a typical mistake. What does that do? Basically, it brings forward people's purchase of cars so that in 5 years' time, when they would normally buy a new car, there isn't anybody buying a new car. It increases the debt that these people would acquire. They get £2,000, but they've got to spend 8 to buy a new car, so there's more debt. And this model of high borrowing, high consumption, is being found to be failing. And this is why we have this recession. What we need to do as a country is move our model from high consumption, high borrowing, and instead of investing in consumption, we need to invest in infrastructure assets. The sort of assets that we can set off against debt. And then the financial markets won't get so jittery about our debt. Governments need to encourage savings to enable higher investment and ease the path from savings to investment. We are one of the lowest savings countries in Europe, by far. This can be done through retail investment by ISAs, allowing tax breaks for ISAs and expanding ISA sectors so that a lot of the investment, all the savings, encourage investment into infrastructure projects. The government can expand the regulated asset base sectors to include high-speed rail, to include roads and other sectors. This will also, there are structural changes that the government can make, and there's discussion on this that will lower the cost of capital by using the regulated asset base. If they're guaranteed by the government, then the borrowing on RABs are at the cost of government borrowing, which is much cheaper than private companies borrowing. We need to adopt a more consistent regulatory framework across the various regulated sectors. There's too many differences, small differences, but between the water and the rail and the roads. There's just too many small differences in the regulations that attract risk and put off investors. So we need to be more consistent about that. And as the Germans and the Australians and the Irish have done, for once the Irish leaders by far, we need to bring together all the different government organizations that are involved in project finance, from the Home Loans Board, which was established in 1793, to Infrastructure in UK, which was established in 2009. We have a whole plethora of organizations all doing their own thing. The idea is to bring them all together under the UK Infrastructure Bank, to allow the UK Infrastructure Bank to adopt the short-term construction risks and allow the long-term investment to flow freely. I will talk more about what I mean by that in a minute, but there are a huge amount of opportunities for this government or any incoming government to improve the way that the finance community is structured and able to access funds. This is my go at consultants and construction companies. We are one of the highest paying countries in terms of infrastructure costs. We pay for tunneling probably twice as much as the rest of Europe, 60% more than the UK, than in the US. In some circles in construction, the UK is known as Treasure Island, because we're mugs, we really are. But we have a fragmented supply chain. We've got very, very dominant big consulting engineers who seem to be more reliant, more interested in billing man-hours than designing for low eventual cost. Driven by inputs, not outputs. There's a lot of lack of alignment. There's a lot of foreign suppliers. We are the only country in the world that give our major projects to foreign companies. I was talking to a French minister about 3 months ago, and he said to me, and this is a quote, he says, "Do you think that if we had two of the biggest projects in Europe, like the Olympics and Crossrail, that we will hand them over to American companies to manage for us?" No, they'd be done for French companies. Barack Obama said the same thing when he declared his $800 billion economic investment. He said this money is for American companies. So we need to be able to retain more of this ourselves. So we need to structure the supply chain too.